Now, 19th question. 19th question is, under which minimum result, how much amount Reserve Bank of India was required to keep in gold and foreign exchange reserves? Options are 200 crore, 220, right? And basically, in this lecture, we will do some practice questions. Okay, we will try them out because we know theory is important, but how you will come to know that you have prepared well? The only way to know this is a practice questions, which you practice. Okay, then only you can uh, regard yourself that you have prepared well. All right. So in this lecture, we are going to talk about the practice question, and at last we will see the summary of them. But the first question that you are seeing here, there are total 25 questions in this lecture, and we will cover them one by one. All right. First question is, in which year the first Bank of India, the Bank of Hindustan, was established? To answer this, you have 30 seconds. After 30, sorry, you have 10 seconds, not 30. You have 10 seconds. After these 10 seconds, I will provide you answer. So your time starts now. Okay, the time's up. The correct answer of this is option B, 7070. If we go by the explanation, then we could say the Bank of Hindustan was established in 1770 in Calcutta, which is now known as the Kolkata, which is the capital of West Bengal, Indian state. It is recognized as the first bank in India and played a significant role in the financial landscape of the country during the British colonial period. The bank primarily served the European community and was involved in various banking functions, including the currency issuance and credit provision. But somehow it eventually ceased operation in 1830, which means the bank could not sustain its position and ceased its operation in 1830. Then, question number 2. Which among the following are the correct location of three presidencies bank during the British India? To answer this, you have 10 seconds. Then I will give you the answer. Time starts now. Alright, the time's up. The correct answer is option A, Kolkata, Madras, Bombay. So basically we know the Britishers had three presidencies in India. The Bengal Presidency, Madras Presidency and Bombay Presidency. In these presidencies, they had established the banks, which were known as the Presidencies Bank. So if we go by the location, Calcutta lies in the Bengal, then you can say Bengal Presidency. Madras, it was Presidency itself, Madras Presidency. Bombay, again it was the Presidency in itself, then Bombay. So go by the explanation. During British India, the three Presidencies Bank was established in these following locations. First is Calcutta or Kolkata. The Bank of Bengal, it was established in 1806 and that was the first of the Presidencies Bank. Okay. Madras or Chennai. The Bank of Madras was established in 1843. Then Bombay or Mumbai. The Bank of Bombay, established in 1840. These banks played a crucial role in the banking system in India during the British period, laid the groundwork for the modern banking infrastructure in the country. Okay. Now let's move to the question number 3. Like which of the following is the oldest joint stock bank of India? Here are the options: Allahabad Bank, Bank of Baroda, Patiala Bank, Bank of India, and none of these. Answer this. Again, you have 10 seconds, then I will give you the answer. And your time starts now. Okay, the time's up. Correct answer of this is Allahabad Bank. Explanation. Allahabad Bank was established in 1865 and recognized as the oldest joint stock bank in India. Played a significant role in the banking sector, providing various financial services to the individuals and businesses. The bank was initially founded in Allahabad and having a long history of operation in the Indian banking landscape. Other banks like Bank of Baroda and others have also been significant, and they got established later than the Allahabad Bank. Bank of Baroda was established in the state of Baroda in Gujarat. Okay. Now, the question number 4. Which among the following was the first bank to open a branch on foreign soil? Like you can say Bank of India, State Bank of India, Bank of Punjab, Allahabad Bank, none of these. So out of these, which option is correct to justify the answer as the first bank to open a branch on foreign soil? To answer this, you will have 10 seconds. Time starts now. Okay, the time's up. Correct answer is this, Bank of India. If we go by the explanation, the Bank of India was the first bank to open a branch on the foreign soil. Established a branch in London in 1946 during the British time, and this marked a significant step in the internationalization of the Indian banks and laid the groundwork for future expansions by other Indian banks in the foreign market. Okay. Now, the question number 5. What was the initial share capital of Reserve Bank of India? Like when the Reserve Bank of India was established during the British era, what was the initial share capital that was prescribed to the bank? Options are 5 crores, 10 crores, 15 crores, 20 crores, or none of these. To answer this, you have 10 seconds and your time starts now. Okay, the time's up. Correct answer of this is 5 crores. The Reserve Bank of India was established in 1935 with an initial share capital of rupees 5 crores. That capital was divided into the shares of rupees 100 each and played a crucial role in the formation and functioning of the Reserve Bank, which got established as the Central Bank of India by the Britishers and responsible for regulating the country's monetary policy and the financial system. Got it? Next question. Question number 6. The Royal Commission on Indian Currency and Finance, it was also known as Hilton Young Commission, Hartog Commission, Moodyman Commission, Butler Commission, none of these. To answer this question, again you will have tenure of 10 seconds. Okay, so your time starts now. Okay, the time's up. Correct answer of this, Hilton Young Commission. So Hilton Young Commission, which was also known as Royal Commission on Indian Currency and Finance. The Royal Commission on Indian Currency and Finance, it got established in 1926 and commonly known as the Hilton Young Commission. Was tasked with the examining the Indian currency and financial system and made these several recommendations to influence the monetary policy in India. Got it? Question number 7. The original headquarters of Reserve Bank of India, these were located at Calcutta, Bombay, Madras, New Delhi, none of these. To answer this, you will have 10 seconds then I will provide you the answer. Your time starts now. Okay, the time's up. So the correct answer of origin headquarters of RBI were located at Kolkata. So if we go by the explanations, we could say actually the original headquarters of the Reserve Bank of India that was indeed in Kolkata at the time of establishment in 1935. So when Britishers established the Reserve Bank of India as the central bank, so the original headquarters were made at Kolkata in 1935. The RBI was first set up in Kolkata as the Central Bank of India, reflecting the city's significance as a major financial center in the early 20th century. However, later in 1937, the headquarters were moved to the Bombay, Mumbai, and where they have remained since. Now still, the headquarters are at Mumbai. If the answer is considered as A. Kolkata, it is likely referred to the initial establishment of the Reserve Bank of India in that city, even though it subsequently moved to the Bombay. For clarity, we could say RBI's original headquarters were in Kolkata, but the current headquarters is in Mumbai. So remember this. Like when the RBI got established, initially they had their base in Kolkata. Later on, the headquarters were at Bombay. Question number 8. In which year Paper Currency Act was enacted by the British Government of India? 1862, 1861, 1852, 1875? None of these. To answer this, again you will have 10 seconds, then I will give you the answer. Your time starts now. Okay, the time's up. The correct answer is 1861. Explanation. The Paper Currency Act was enacted by the British Government of India in 1861. This act authorized the issue of paper currency by the government, replacing the existing practice of using silver and gold coins. Okay, like previously, as we know, in India, we had the currency system where we used the silver and gold coins, but these were precious metals. So whenever the government tried to make the coins of them, the cost of making them is higher. So that's why the government authorized the issuance of paper currency by passing the Paper Currency Act 1861. The primary purpose of the Paper Currency Act was to establish a uniform system of currency in India and to address the issue of currency shortage and the difficulties in coin circulation. It allowed the government to issue banknotes that would be backed by the gold and silver reserves, which helped stabilize the economy. The act laid the foundation for the modern currency system in India. Question number 9. On which date the RBI started working? 1st January 1934, 1st January 1935, 1st April 1935, 31st March 1934? None of these. To answer this, you will have 10 seconds. Your time starts now. Okay, the time's up. Correct answer of this is 1st April 1935. So the Reserve Bank of India got established on 1st April 1935. This date marks the commencement of its operation as the Central Bank of India. with the primary aim of regulating the issue of banknotes, maintaining the monetary stability, overseeing the banking sector in the country, and the RBI was founded in response to the economic challenges of the time and has since played a crucial role in India's financial system. Next question, question number 10. Which year regional rural banks started working in India? 1970, 1975, 1978, 1981, none of these. To answer this, you will have 10 seconds and your time starts now. Okay, the time's up. Correct answer is 1975. So regional rural banks started working in 1975. If we go by the explanation, regional rural banks established in India in 1975 with the aim of providing the credit and developing the rural economy by meeting the financial needs of the rural population, particularly the small farmers, agricultural laborers, and rural artisans, who generally not entertained by the normal banks. The introduction of RRBs was part of a broader strategy to enhance the rural development and improving the access to the banking services in rural areas. Question number 11. The earliest evidence of banking transaction in India comes from Vedic era, Maurya era, Gupta era, medieval era, none of these. To answer this, 10 seconds you have, time starts now. Okay, the time's up. So the correct answer is Vedic era. Explanation. Earliest evidence of banking transaction in India could be traced back to the Vedic era around 1500 to 500 BCE. During this period, various references to the financial transactions, loans, and deposits could be found in the ancient texts such as the Vedas. These texts describe the activities related to the trade, barter, and the lending of money, indicating the existence of rudimentary banking practices in the ancient India. Next is question number 12. The liberalization of Indian banking and regulation system was done first on the basis of recommendations of which committee? Narsimham Committee, A. Ashok Committee, Saraiya Committee, Khusro Committee, none of these. To answer this, again you have 10 seconds. Time starts now. Okay, the time's up. So, the correct answer is Narsimham Committee. Explanation. The Narsimham Committee got established in 1991, played a pivotal role in the liberalization and reform of the Indian banking sector. The committee's recommendation focused on enhancing the efficiency of banks, improving the regulatory framework, promoting the competition in the banking industry. Proposals led to the significant changes, including the introduction of new private sector banks and restructuring of public sector banks, paving the way for a more open and competitive banking environment in India. Okay. Now, question number 13. In which year nationalization of subsidiary banks of State Bank of India (SBI) was done? 1955, 1956, 1959, 1980, none of these. To answer this, again you have 10 seconds and your time starts now. Okay, the time's up. The correct answer of this is 1959. Explanation. As the nationalization of subsidiary banks of the State Bank of India occurred in that year, so 1986 is the actually current answer, but 1959 also. So to clarify this, we could go by the explanation further. The SBI got nationalized in 1985, and the nationalization of subsidiaries bank followed in 1956. But in 1959, the government did implement further measures related to the banking and finance, but the specific nationalization of subsidiary banks took place in 1986. If there's confusion about 1959, it could stem from other banking reforms or events occurring around that time. But the direct nationalization of the subsidiary banks is indeed documented as happening in 1956. Now the question number 14. What was the name of State Bank of India before it was created by the SBI Act? Imperial Bank of Hindustan, Imperial Bank of Bengal, Imperial Bank of Madras, Imperial Bank of India, none of these. To answer this, again you have 10 seconds. Your time starts now. Time's up. Correct answer is Imperial Bank of India. Now let's go by the explanation. Before the creation of SBI by the PI Act 1925, it was known as the Imperial Bank of India. The Imperial Bank was established in 1921 following the merger of the Presidencies Bank of Bombay, Kolkata and Madras. Purpose of renaming it as the State Bank of India was part of broader strategy to nationalize and integrate the banking system in India, making banking services more accessible to the general population and aligning with the government's objective for economic development. The SBI was thus positioned as a state-owned entity to promote the financial inclusion and support various developmental activities. Question number 15. Which among the following is not a subsidiary of Reserve Bank of India? National Housing Bank, NABARD, Bharatiya Reserve Bank Note Mudra Private Limited, SIDBI, and none of these. To answer this, again 10 seconds you have. Time starts now. Now, time's up. The correct answer is SIDBI. Go by the explanation, we could say. National Housing Bank, this is a subsidiary of Reserve Bank of India, focuses on promoting housing finance. NABARD, National Bank for Agriculture and Rural Development, established by an Act of Parliament, functions under the aegis of Reserve Bank of India. Considered Development Bank, works primarily for the rural development and agriculture. Bharatiya Reserve Bank for Note Mudran Private Limited, BRBN MPL, subsidiary of RBI involved in the production of banknotes in India. Then the SIDBI, Small Industries Development Bank of India. Unlike the other, the SIDBI is not a subsidiary of the Reserve Bank of India. It is an independent development bank set up in 1990 to aid the growth and development of small-scale industries in India. Therefore, SIDBI is the option that is not a subsidiary of the Reserve Bank of India. Question number 16. The headquarters of local boards of Reserve Bank of India located at Mumbai, Kolkata, Chennai and New Delhi, Mumbai, Jaipur, Chennai and Mysore, Mumbai, Ahmedabad, Chennai, New Delhi, Mumbai, Ahmedabad, Jaipur and New Delhi, none of these. To answer this, 10 seconds are there. Time starts now. The time's up. So the correct answer is Mumbai, Kolkata, Chennai and New Delhi. Explanation. The Reserve Bank of India has local boards to cater to the regional needs and facilitate the banking services. Headquarters of these local boards located in the following cities: Mumbai, which is the main headquarters of RBI; Kolkata, one of the major local board headquarters reflecting the historical significance of banking in the city; Chennai. Another important location for the local board, New Delhi. Capital city also hosts one of the local boards. These boards represent the interest of different regions in the decision-making process of the Reserve Bank of India. Which of the following is not a function of Reserve Bank of India? Options are: controls the credit operations of bank through quantitative and quantitative tools, lender of the last resort, holds cash reserve of all the scheduled banks, manages credit rating of banks, none of these. Answer this 10 seconds you have, time starts now. Time's up. Correct answer is D, manages credit rating of banks. Go by the explanation. So the functions of Reserve Bank of India include controls the credit operations of bank through the quantitative and qualitative tools. Indeed, a function of Reserve Bank of India regulates the money supply and controls inflation. Lender of the last resort. RBI serves this function by providing funds to the bank in distress to maintain stability in the financial system. Third, holds cash reserve of all the scheduled banks. RBI mandates the scheduled banks maintain a certain percentage of their net demand and time liabilities, in short known as NDTL, as the cash reserves with it. Manages credit ratings of banks. Not a function of the Reserve Bank of India. Credit ratings of banks typically managed by the credit agencies, not by the central bank itself. Question number 18. Under which section of the Reserve Bank of India Act 1984, the RBI has the sole right to issue banknotes of all denominations? Section 24 of the RBI Act 1984, Section 25 of the RBI Act 1984, 21 of the RBI Act 1934, Section 22 of the RBI Act 1934, and none of these. Answer this, you have 10 seconds, time starts now. Okay, the time's up. Correct answer is Section 22 of the RBI Act 1934. Go by the explanation. RBI Act Section 22 of the Reserve Bank of India 1984 grants the Reserve Bank the exclusive right to issue banknotes of all denominations in India. This section outlines the provisions related to the issuance of currency notes, emphasizing the RBI's role as the sole authority for currency issuance, which is crucial for maintaining monetary stability and public confidence in the currency. Okay. So now, 19th question. 19th question is, under which minimum reserve, how much amount Reserve Bank of India was required to keep in gold and foreign exchange reserve? Options are 200 crore, 220 crores, 222 crores, 280 crores, none of these. Answer this, you have 10 seconds, then I will give you the answer. Time starts now. Alright, the time's up. Correct answer is 200 crores. Explanation. Minimum reserve system. Introduced in 1956, this system was designed to ensure that the Reserve Bank of India maintain a minimum reserve of 200 crores in gold and in foreign exchange to back the currency issue. Purpose. System aimed to provide the confidence in the Indian currency and ensure that the Reserve Bank had sufficient reserves to meet its currency obligation. This was particularly important for maintaining stability in the financial system. Revisions. While there were discussions about increasing the reverses over time, the initial requirement under the minimum reserve system was indeed set at rupees 200 crores. Thus, if your source indicates that the answer is 200 crores, it reflects the original stipulation of minimum reserve system, which got established in 1956. Now, question number 20. Which of the following is the quantitative tool of the Reserve Bank of India? OMO, reserve ratios, rationing of credit, statutory preemptions, and none of these. To answer this, you will have 10 seconds, then I will give you the answer. So your time starts now. Okay, the time's up. Correct answer is rationing of credit. Go by the explanation. Quantitative tools The Reserve Bank of India uses various quantitative tools to regulate the money supply and credit in the economy. These tools including first is open market operations, buying and selling of government securities to control the money supply. Reserve ratios includes the cash reserve ratio and statutory liquidity ratio, which dictate the amount of funds banks must hold in reserve. Statutory presumptions refers to mandatory reserves that banks must hold, like CRR, cash reserve ratio, cash reserve ratio, as well as statutory liquidity ratio. Rationing of credit. This is not considered a quantitative tool. Instead, it is to a qualitative tool that rates the availability of credit based on various criteria, focusing on directing credit to the specific sectors rather than controlling the overall supply of money. Now let's move. Question number 21. Question number 21. Under which of the following rates the banks avail long-term loans from Reserve Bank of India by putting no collateral security? To answer this question, again you will have 10 seconds. Okay, and options are bank rate, repo rate, reserve repo rate, margin standing facility, none of these. So your time starts now. Okay, the time's up. The correct answer is bank rate. Go by explanation. Bank rate. The rate is the rate at which the Reserve Bank of India lends money to the commercial banks without any collateral. This facility is primarily used by banks for long-term loans. Since it does not require the submission of securities, it provides banks with liquidity for extended periods. Repo rate. This is the rate at which the RBI lends money to the banks against collateral, using the government securities. It is typically used for short-term borrowing. Then, reserve repo rate. This is the rate at which the RBI borrows money from the banks requiring collateral as well. Marginal Standing Facility (MSF). While it does allow banks to borrow overnight funds without collateral, it is typically used for very short-term liquidity needs and is charged at a higher rate than the repo rate. Okay. Question number 22. With reference to the commercial papers or CP, which of the following is not a correct statement? Prior approval of Reserve Bank of India needed to issue CP, issued in the multiple of rupees 5 lakhs, issued in the form of issuance of promissory note, issued at a discount to face value, and none of these. To answer this, you have 10 seconds and time starts now. Okay, the time's up. Now, the correct answer is prior approval of Reserve Bank of India needed to issue the commercial paper. Go by explanation. Commercial papers, these are unsecured money market instruments issued by companies to raise short-term funds, typically used for the financing working capital needs. Statement analysis. Prior approval of RBI is needed to issue CP. The statement is not correct. Companies could issue CP without prior approval of Reserve Bank of India, provided they meet certain eligibility criteria set by the Reserve Bank of India. Then, issued in the multiples of rupees 5 lakh. This is correct. CPs are issued in denomination of 5 lakhs and above. Then, issued in the form of issuance promissory note. This is correct. CP typically structured as issuance promissory note, issued at a discount to face value. This is also correct. CPs are issued at a discount to their face value and redeem at par. Conclusion. Since the statement is not accurate regarding the requirement of RBI approval, it is the correct answer. Next question is question number 23. Which of the following terms is used in the banking field? 10 seconds you have, time starts now. Okay, the time's up. Correct answer is interest rate swap. Explanation. This is a financial derivative commonly used in the banking and finance. It is an agreement between two parties to exchange interest rate cash flows, typically one fixed rate for one floating rate based on a specific notional principal amount. Tool is used for managing exposure to fluctuations in the interest rate. Other options, input devices. This term refers to hardware devices used to input data into a computer, example keyboard, mouse, and not specific to banking. Sedimentary. Relates to geology and refers to rocks formed by the accumulation of sediment, has no relevance in banking. 0 hour could refer to various contexts including emergency management and military, but not specifically a banking term. Okay. Question number 24. Which one of the following issues can SEBI penalize in any company in India? 10 seconds you have, time starts now. Time's up. Correct answer is D, both second and third. Explanation, SEBI's authority. It is the regulatory authority of the securities market in India. Primary role is to protect investors' interests, developing the securities market, regulate its function. Analysis option. Violation of Banking Regulation Act. SEBI does not have the authority to penalize companies for violation of Banking Regulation Act, primarily enforced by the Reserve Bank of India. Violation of foreign portfolio investment guidelines. SEBI could penalize companies for violations of foreign portfolio investment guidelines, as this falls under the jurisdiction to regulate the securities market and protect the investor. For violation of Negotiable Instrument Act. SEBI does not have the authority to penalize for violations of the Negotiable Instrument Act. Deals with negotiable instruments like checks and promissory note, more relevant to banking and legal framework, not directly under SEBI's purview. Question number 25. Question number 25. Expand the term ALM as used in banking finance sector. Again, 25 seconds you have, time spent now. Okay, your 10-second time has over. Now, correct answer is asset liability management. Explanation. This is a crucial practice in banking and finance sector, involves managing the risks that arises from mismatches between assets and liabilities. Primary goal of ALM is to ensure that a financial market has sufficient liquidity to meet its obligation while optimizing returns. Importance of ALM. You can say effective ALM helps banks and financial institutions manage the interest rate, liquidity risk, and funding risk, ensuring financial stability and compliance with regulatory requirements. Therefore, in the context of banking and finance, ALM stands for asset liability management. So, for summary, we have talked about establishment of Bank of Hindustan, location of 3 presidencies banks, oldest joint stock bank in India. First bank to open a branch abroad, initial share capital of Reserve Bank of India, Royal Commission on Indian Currency and Finance, origin headquarters of Reserve Bank of India. Paper Currency Act enactment year, RBI started operation date, regional rural banks started year, earliest evidence of banking transactions. Committee for Banking Liberalization, Nationalization of Subsidiaries, Banks of SBI, name of SBI before SBI Act, not a subsidiary of RBI. Headquarters of local boards of RBI, not a function of RBI, selection for RBI's right to issue notes, and minimum reserve requirement. Then, not a quantitative rule of RBI, rate for long-term loans for RBI, commercial papers, incorrect statement, terms used in banking, and this and that as a summary. So with this, we have finished this lecture. Okay, it is requested to all of you, kindly revise the facts and figures in the proper manner before you go for another lecture. With this note, let's end this lecture and thank you.